Hey guys, it's Alicia here with Kelly Williams, South Tampa, coming at you again for another Millennial Monday. As always, thank you so much for tuning in. I hope that you guys had an amazing, happy, food, family, friend-filled holiday weekend. We're just kind of, I don't know about you, but I'm having a really hard time getting back into the swing of things today. But anyway, we are continuing our first-time homebuyer series, right? So at this point, we have been pre-approved. We found the right realtor. We managed our expectations. We made an offer, and we've completed the inspections, both the home inspection and the WDO, right? And we made any necessary negotiations or repairs based on that. So at this point, we are up to step number 6. I did end up finding this board. My wife put it in my backpack. Thank you for that, Rochelle. Don't know why. Anyway, so we're on to the appraisal and insurance. These are the less glamorous parts of buying a house, absolutely necessary, so let's cover them. This is not going to be a long video today, guys. So what is an appraisal? An appraisal is basically an assessment done by a neutral third party who is licensed in real estate appraisals. And what they do is they use multiple different models to try and determine the fair market value of a home, right? Why do we get an appraisal? An appraisal is something that's necessary for the bank. So basically, if you're not taking out a mortgage on a home, if you're buying a house cash, you don't have to deal with this step. Most people are not, especially not first-time home buyers. So it's definitely relevant for us to touch on this appraisal. You as the buyer will pay for the appraisal. This will be paid for at the time of closing, and the good faith estimate that the bank gives you and the disclosures will disclose exactly how much that's going to cost. And it can vary anywhere between $3, $5, whatever, $100, okay? So I don't want to give you exact numbers, but you're going to need a couple $100 set aside for this, for the closing. The appraisal is literally just to protect the bank. Basically what they want to do is they want to ensure they're not writing loans for homes that they can't recoup the value of, right? So they want to know that if you stop paying your mortgage, they can sell this house and sort of recoup the majority of their loss. And when it comes to appraisals, really, one of 3 outcomes is going to happen. You're either going to appraise at exactly what you're under contract for, you're going to appraise higher, or you're going to appraise lower. If you appraise lower, say you offer $200,000 in a house and appraiser determines the house is only worth $180,000, at that point you go back to the negotiation table or bring cash to close, maybe a combination of 2, right? If it appraises at the contract amount, perfect, you're good, don't worry about it, right? And if it appraises above the contract amount, that's awesome. That's just equity that you're sitting in from day one, so that's killer. All right, so that's the appraisal in a nutshell. Insurance is really, 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 really boring. I hate paying insurance for every type of insurance that I pay, but it is unfortunately a necessary evil, especially when it comes to your house. And the bank will not issue a loan without a plan already sort of pending in place for that house. Again, this is to protect the bank. If something happens to the house, they want to ensure that the house is covered, and obviously it's to protect you and your money, right? Your investment. With the insurance, really, I'm not going to pretend to be an insurance adjuster or an insurance broker. I really am not an expert on this, and I'm not going to pretend to be, guys. You want to take a look at a couple of things. You want to look at the dwelling coverage. You want to look at your deductibles. You want to look at whether or not it includes personal property and whether or not you have liability insurance. But for more information on this, I would actually encourage you to go talk to someone who does this for a living, just because they're going to have way better information than I do, right? Get at least 3 quotes. Really shop around, and you can change this. If after 1 year you feel this is not the right policy for you, you find a better deal, you can change your insurance, no big deal. But you do need to have something ready before you go to close on the house. All right. So that's really it, guys. I don't need to talk too much more about it. At this point, as always, please, if you have any questions, let me know. That's what I'm here for. I work for you guys, okay? So, less prepared today, but nonetheless, call me if you need me. Can you read my handwriting? 813-270-3659. Once again, 813-270-3659. I appreciate you guys tuning in. Good luck getting back into the groove of things. I know that I am personally struggling, But until next time, be good.